Holy smokers, this ain't no dang jokers. What a comeback the last 2 weeks in the market. Public account on last Monday got down to just over a little over $2 million. And here we are less than 2 weeks later at around $2.3 million on the portfolio, right? An incredible $250,000 roughly comeback. And, sometimes we see the numbers and sometimes it doesn't hit us. Like, how much is that really? So I was like playing around. I'm like, what could you get with $250,000? So you would get a brand new Model Y from Tesla. You could get a brand new Model 3 from Tesla. You could also get a brand new Cybertruck. You could also come to my city, do a baller vacation, stay at a suite at the Encore, eat at the finest restaurants, go to the best bars, lounges, and clubs, all that good stuff. You could go to Foot Locker and get yourself a whole new shoe wardrobe, exactly what you're looking for. You could go on an all-inclusive, great vacation to Cancun, and you would still have a suitcase of money. And so sometimes you just gotta back it up a little bit and say, man, that's quite a bit. It's more than just numbers on a screen, right? So yesterday was moving day for me. There's some positions I sold. There's some positions I bought yesterday. We're going to talk about why I did that. I'm going to go through in this video here today exactly what I did, why did I do it, and it was very tough decisions. I can tell you, especially when it comes to selling, I sold out of completely two positions. Toughest decisions you're usually going to make. The buying decisions are so much easier than that, in my personal opinion. So we'll speak in this video why I did that, all those sorts of things. I appreciate y'all joining me as always. I hope you're having some fun in the market. It's been a lot of fun. If you haven't been having some fun recently, what are you doing, man? You gotta start knowing what to do in the market, because I'm telling you, man, this market's been a lot of fun. And if you haven't been having fun, I don't know what to tell you. You should be having some fun. Appreciate y'all joining me. We're on the path to 735,000 subscribers here on the channel, so appreciate each and every one of you for being here. If you're looking to apply to join my private wealth group, my private stock group, get access to 1000xstocks.com. That'll be pinned comment down there today. Fill out a form. We'll see if we can get you access to that maybe next week, okay? Alrighty, so first thing I sold out of in the public account is Chipotle. So Chipotle put options. I finally did it. I sold the remaining of my Chipotle put options here. Very tough decision. Now, these ones are $63 strike on these ones, right? They expire March 21st of 2025. I've done very well on this batch of Chipotle put options here. And I looked at it and I said, it's time I just go ahead and cash these babies. Now, let me say a few things about this, right? I do believe there's a real potential Chipotle's going to $45 or under, right? And there's two ways it could go to $45 or less, which would mean I didn't sell at the ideal time. One is if the market gets hit, right? If we have any sort of real weakness in the S&P 500 and the NASDAQ over the next few weeks or the next month, that would be a situation that alone would send Chipotle down to $45 or less if we got a real big hit in the market, right? The other potential is if next time Chipotle comes out with numbers, which keep in mind, they're not going to come out with numbers for another 2 months roughly. But when those numbers do hit, let's say in 2 months, if their numbers are bad, let's be quite clear, Chipotle stock will go down considerably. It could even go below $40. 45, if the numbers are bad, 45 or below is almost a guarantee. But if the numbers are bad, it could go below 40, right? We know the CEO just left the company or is about to leave the company. He's going to go over to Starbucks. And so that's going to be something that negatively weighs on the stock in the short term, because a lot of people loved Mr. Taco Bell running Chipotle, right? And so my thought is, I don't think I've sold at the best time possible, but that's fine. That's fine in the end. I've done really well on this, and I understand, don't matter what, I'm never going to sell at the best time possible, these put options, right? There's a few factors that lead me to say, yeah, let me just take the dang profit and go in this one. One, it's a hard stock to bet against. I mean, it's a brutal stock to bet against. I mean, there's only been a few times in recent history where Chipotle's been a good stock to bet against. One was when they went through the E. coli situation back in around, what year was that? I think that was either 2015 or 2016. It was a great time to bet against Chipotle stock. And very recently, outside of that, this stock is brutal to bet against, because at the end of the day, they just put up their numbers. I don't even know how the heck they do it. Sometimes I look at their numbers, I'm like, how did they do that? How did they put that up? A lot of the customers will say, well, it's because they've gone up a lot in price and they keep cutting down on portion size. and they keep cutting down on hours and those sorts of things. I don't know. The bottom line is, like, I'm shocked. It's a hard stock to bet against. It has been very difficult. The third thing is, when you're dealing with options, you're dealing with time decay, which is something that has to be factored in. The closer and closer you get to the expiration, the less and less people are going to be willing to pay for that over time, right? So I have to deal with time decay here. The perfect timing is tough. I never perfectly time stocks. I did get Meta shares at 88.94 back in 2022, but at the end of the day, like, look at most of my shares in Meta I bought back in 2022. Did I perfectly time them? No. I bought shares at 100 and something, right, and 150 something, and like multiple batches. And so I might have bought a batch of shares at the perfect time in regards to Meta, but a lot of those shares were not bought at perfect. So timing, to time it perfectly, it's impossible, right? Fourth thing is since these are put options that have made a lot of money, the gains can go away so quick in regards to this, right? It's like, okay, I made a bunch of money. If all of a sudden Chipotle goes back to 57, 58, I'm not even talking back to the 60s, 59, I'm going to lose all my gains in these Chipotle put options. And next thing you know, I could go negative. And if you're sitting on a massive gain and then all of a sudden you go negative, it's not very fun, right? It can happen really, really quick in regards to these put option plays. And you just got to view something like this. It's not like going long a stock. You go long a stock, you can hold these stocks for years and years and years. You can feel comfortable through different up markets, down markets. In regards to something like this, timing is very important. And if you get a great profit, sometimes you just got to take it, right? Now that leads me to where is my next hedge, and then we'll talk about the other stocks I sold, where I put money, what stocks I bought, and things like that, right? But we got to talk about what my potential hedges are from here. Because now that I'm moving out of Chipotle, I still have a few other Chipotle put options in another portfolio, but I've moved out of the majority of my Chipotle put option bet at this point in time. Okay, so where am I going to look for hedges next? Now, keep in mind, I'm going to likely be looking for my hedges in the fourth quarter of this year. That's usually when I like to buy my hedges and go ahead. I mean, usually a lot of times in Q4, it's a good time for the market in general. So I like to kind of plan out my hedges for the next year, for 2025, at that particular time. So I'm holding $30,000 plus in the public account right now that I'll be looking for my future hedges. Here's the stocks I'm considering. Coinbase. I'm considering Toll Brothers Pulte Home, so kind of like home builders. I'm considering Wingstop. I'm considering Costco, and I'm considering going against the NASDAQ. Now, let's talk about each of those, break those down, what are the probabilities I would actually do that, and those sorts of things, okay? So going against Coinbase, I would have to be confident that Bitcoin's going down. Now, I don't like this one right now. And the reason I don't like it right now, in even kind of thinking about it over the next few months as a hedge, is I would like to see Bitcoin in a blow-off top situation. Bitcoin's not doing that right now. Look at Bitcoin for the past many months. Honestly, the last 6 months, Bitcoin's kind of just been downtrending. I mean, I would much rather like to bet against Coinbase, because, like I said, betting against Coinbase is kind of like betting against Bitcoin. I would like to see it ideally in a situation where it's in a blow-off top, you're at a maximum hype cycle, everybody seems to be bullish on it, right? And I just don't feel like we're in that spot with Bitcoin right now. It kind of feels like it's in no man's land. And so therefore, I don't really feel that comfortable betting against Coinbase stock. Like if things change and all of a sudden everybody's hyped on it and everybody and their grandma is talking about buying Bitcoin, then we're talking about that might be a moment I start to look for Coinbase. So right now, it's just not what's going on here. I want to see this baby go pew to the moon, right? I want to see I want to see people that don't even care about Bitcoin or usually would never talk about it. I want to see those people saying, oh man, gotta buy Bitcoin. You gotta buy Bitcoin. When that happens, then we're talking. But we don't have that right now. So it doesn't make a Coinbase bet ideal. The next one's up here, the home builders, right? Looking here at 1000xstocks.com, looking at something like Toll Brothers. This is an ideal bet right now, and the reason being is it looks like Toll Brothers is about to go into a situation where their business is actually going to accelerate. And so being that they could be going into a cycle of their business accelerating, I don't like to bet against a company where their business is going to be accelerating. That's not ideal. I want to be betting against a company when their business is about to decelerate or a situation where their business is about to go negative, and that's just not what we have in regards to Toll Brothers, right? So that makes it tough. Keep in mind, mortgage rates could be going down here. High probability they go down over the next 12 months. So as mortgage rates go down, It could help the real estate market. Now, that could end up being a negative for Toll Brothers eventually, because we could be talking about a situation where more inventory comes online, like existing inventory, and then that becomes a competitive threat for new home sales, which would hurt somebody like a Toll Brothers or Pulte or these other guys. But not ideal that their business is likely going to be accelerating here. I mean, trailing 12-month revenue growth is non-existent, but then look at the current year expected revenue growth by analysts, 6%. That's not good. That's an acceleration of business, right? I need to be betting against it if I'm confident there's going to be a deceleration or the business is going to go negative. So we'll see. The second problem I have in regards to Toll Brothers is valuation. It trades really, really dang cheap. I mean, really, really cheap. Now, home builders are always going to trade cheap. And the reason being is their businesses are so cyclical. People don't want to hold these stocks for the long term. They use these more as trading vehicles. Oh, you're confident that there's going to be a big construction cycle in home building? Okay, we hold a Toll Brothers, right? But right now, I mean, we could be looking at a situation. Here's the thing. I would love to see a blow-off top in regards to these home builders. If we see a blow-off top in regards to these home builders, and then we could be looking at a situation where I need a lot more existing inventory to come online. If we see existing inventory hit the market big, that could weigh on prices, that could weigh on new home sales. Then we could be talking Toll Brother orders in 2025 could be weak. Now we could be talking. Then if simultaneously, because of Fed cuts, we go through a commodity upcycle, and let's say the price of lumber goes up substantially in other raw materials that go into building a home, that could weigh on Toll Brothers margins. If simultaneously prices of homes are coming down, let's say in 2025 because too much existing inventory is hitting the market, then we're talking. Then we're in business. So the pieces are potentially there to bet against the home builders, but they're not quite all there yet. I would love to see these babies rocket ship ride the next couple months, and then maybe talk about a hedge against them in maybe October, November. Then maybe we're talking, but we need to go on a rocket ship ride first to make me feel more comfortable in regards to hedging against those ones. This one looks pretty darn attractive, Wingstop. This one looks like it's probably the most ideal and ready to rock and roll in regards to a hedge I'm looking at. And the reason is Wingstop trades at ridiculous valuations. Now, the other thing, a lot of people like to compare Wingstop to Chipotle. I don't compare those two. And the reason being is Chipotle always had such a craveable product that you wanted to go back for time and time again. And they also kind of played in this trend of like people viewed it as a healthier food, right? Which is debatable, but people would view it as that. And so they kind of had this perfect trend. Wingstop's not in that healthy trend. Additionally, Wingstop is not like a craveable food. Like if you've ever had Wingstop, their chicken wings are like, very average chicken wings. I know of a lot of places here in Vegas that got way better chicken wings than Wingstop does. And so when you trade at this sort of valuation, it's a little ridiculous. Additionally, look at the current year expected revenue growth, 34%, but then next year, analysts only have them growing down to 12%. If they see that big of a deceleration, you're not going to be able to command these sorts of PE metrics. You can get away with these crazy 100-something forward PE and 84 2-year out forward PEs if you're growing revenue 30+%, right? And if you're growing your earnings per share 50+%, sure, grow your revenues 30+%, your earnings per share 50+%, you could command a ridiculous PE ratio on you. But if that goes bye-bye, and all of a sudden your earnings per share goes down to 15% and your revenue growth goes down to 12%, you're not going to be able to command these ridiculous valuations. So Wingstop looks pretty tasty. I will say that, okay? Now, Costco. Costco. I mean, this is a tough one. Because here's the thing. First off, we know Costco's a brutal stock to bet against. I mean, can you ever make money betting against Costco? Not really. But I will say, if you look at Costco's history, we never really see it trade at this ridiculous of P metrics. A forward P of 52 on Costco? 52? You're going to be flipping my flapjacks, right? I mean, that's crazy for Costco. 52? Seems out of whack, right? It seems like that's not sustainable. Let's just call it what it is. Even a 2-year out forward P 47? It doesn't seem sustainable, right? Costco, premium name, always deserves it. You can say slap a high 20s P ratio on a forward P on Costco, fair. Like if Costco's trading at a 27 forward P, I'd say yeah, it's rich for retail, but since it's such a premium name in Costco, not that bad. Okay, I get it. 52 forward P? We're talking forward P. 47 2-year forward P? I don't know, man. I don't know. But it's a brutal stock to bet against. So this is what I'm considering. If it has some sort of, next leg higher and it does some sort of blow off top, I might try to slay that dragon. And damn, that's a dragon to slay there. Costco? I mean, Chipotle's been a brutal dragon to try to slay. Could I slay Costco? I don't know, man. I don't know. Maybe. SQQQ. No. SQQQ, I don't like it right now. But I might like it if we have a blow-off top in tech stocks. And the reason being is a lot of these tech stocks are kind of floundering right now. Microsoft's a little floundering recently. Nvidia's floundering recently, right? Meta's even floundering recently. Like that stock's just a little over 500. Amazon stock's floundering recently. And these are the big weights. These are the big weights for the NASDAQ. So I don't really like betting against the NASDAQ if these guys are just kind of chilling right now. I want to see a crazy blow off top. I want to see maximum, kind of like we're talking about Bitcoin earlier in regards to hype, excitement. Everybody wants to be in the tech stocks. Buy the tech stock, big tech, big tech. Recently we've kind of seen a lot of more weakness there. It kind of seems like people, if anything, they're looking to play some of the more, beaten down stocks in the market, some of the small caps and things like that. And we're kind of seeing some rotation potentially out of some of these big dogs into the smaller stocks. So I don't love it right now. I want to see a blow off top in regards to that, and then we can talk, right? So that's kind of hedges. Now, what's the next stock I sold out of completely, right? The other one was a hedge. This is actually a long position. Believe it or not, I sold out of Nvidia in the public count. We've done very well in the stock in a very short amount of time, made 40% on this. Now, you got to understand, Nvidia and me, we have a history. So years ago, as in that was back in 2018, I bought Nvidia stock. This is when Nvidia was a fraction the size it is, right? I made a bunch of money in the short term and I sold it. Do I regret that? Hell yeah, of course I regret that, right? Will I regret selling these Nvidia shares? Maybe, right? Nvidia's a $3-something trillion market cap-ish right now, right? Maybe it goes to a 30 trillion. It's another 10x, and I'm like, oh my gosh, why did I sell Nvidia? It's potential. But I think I'm making the right move here. By the way, I don't think I'm making the right move necessarily in the short term, but I think I'm making the right move over time, okay? So my guess is Nvidia's probably going to top at the $150 to $200 level before the cycle slows, right? Now, just because I think that's going to happen, one, that doesn't mean that's going to happen, right? Two, playing that and trying to perfectly time that's going to be tough, right? But I do believe eventually the cycle is going to slow substantially that we're in, and everybody's going to freak out when that happens, right? Now, people have gotten the timing wrong here. A lot of people thought in 2023 the cycle was going to slow substantially. They were way off. These cycles for Nvidia usually last 3 to 5 years, right? So the chances it was going to die in the first year, come on, no. A lot of people thought it was going to die this year. No, it's year 2. These cycles usually last 3 to 5 years, these mega uptrends for Nvidia, right? So it's likely not dying this year either. 2025, 2026, then you can at least begin to have a conversation. So in regards to Nvidia, here's what I'm looking at here. I believe this stock likely tops in the next 3 to 9 months, and I'm talking a likely multi-year top. Not like tops in the short term. I'm talking like a multi-year top for this stock. Likely comes in the next 3 to 9 months. Maybe it makes that move to $150, $200 range, and then it starts to come down from here. And here's why I'm looking at that. So if we look at kind of a 2-year out forward P, analysts are at about a 35 2-year forward P roughly, right? Which isn't crazy for Nvidia given the growth rates this company's had. So in my opinion, 2025 is good for this company as far as their numbers go. The reason being is I think the Tesla orders are going to keep coming in for the Tesla order and their chips. Meta's going to keep ordering their chips in mass in 2025, in my opinion, as well, based upon what I'm hearing from the management team around kind of how they're thinking about CapEx. A lot of these companies haven't given finite CapEx numbers, but they're kind of signaling where they're going. And a lot of them, it's going higher, right? So they're going to spend even more with Nvidia in 2025. Microsoft orders are going to be there. So all the big techs, I think their orders are going to be there for 2025. But I do think we're going to see a substantial slowdown in 2026. So people are going to start worrying about that and freaking out about that likely in 2025, right? Because it's not like if orders are going to slow down substantially in 2026, it's not like all of a sudden everybody freaks out in 2026. No, they start freaking out earlier, right? Remember, this is all game that's played ahead of time. Nvidia's stock bottomed way before their business bottomed. We didn't see Nvidia's business really start to uptrend majorly until really the back half of 2023 in the numbers. The stock had already been going beast mode since the end of 2022, since the fourth quarter of 2022, and it went beast mode all the way into the first quarter, second quarter, right? So it's usually playing in the future 6 to 9 months. So that's why I think the stock likely tops in the next 3 to 9 months, and then we could be talking about likely a multi-year kind of, a multi-year blah in regards to Nvidia stock, right? So that's kind of my opinion on what's going on here. And keep in mind, if Nvidia grows in 2026, like my opinion is Nvidia's growth rates in 2026 are going to be anywhere from positive 10% to negative 10%, which is night and day difference from where they're at right now. So now positive 10% is if the AI market continues to be strong. I think they'll put up a number like that. Negative 10% if the AI market weakens significantly, and let's say these companies are just having trouble making money off anything AI, right? Eventually, patience comes and plays into play here, and eventually people get sick of it, and they just like, nah, like we're not going to put in this crazy amount of orders. Like they'll still order chips, but you understand you're starting to hit the law of large numbers after 2025 for Nvidia, where it gets damn difficult for them to keep having these 30% type growth rates, right? So that's my opinion on what happens here in regards to Nvidia. So like I said, I probably didn't sell the top. The stock might go higher, might go to 150, 200, but I don't want to be stuck in this one and then hold it through a likely multi-year top situation, which I think is likely to happen there, right? Now, that leads me to Nike. So I bought Nike. I bought about $8,000-ish worth of Nike. It's had a brutal 5-year span. I mean, negative 2% for Nike in a 5-year is horrible. It went into this 5-year span in too high of a valuation. And additionally, obviously, numbers have been really disappointing. That's not going to last, in my opinion, but it is what it is, right? So in regards to stock, it's starting to accelerate here. Nike's up 9 consecutive days, on track for the longest winning streak since 2016. Currently up 10 of the past 11 trading days, longest winning streak since February 26, 2016, when it rose 10 straight trading days. So we saw Bill Ackman recently bought a stake. So clearly, people are starting to rotate into a lot of these more consumer names that have beaten down dogs, right? These stocks are beaten down, nasty style. Now, I'm trying to add this stock as fast as I possibly can. As fast as I possibly can. If you keep track of my buys, I'm buying Nike stock pretty much every single week right now. And I've done this for the last several months. I'm buying Nike stock pretty much week in and week out. Listen, man, you don't get Nike almost ever down on a 5-year basis. Like, we're in a freak situation here, and I got to take advantage of this freak situation we're in right now, right? Because this will not be lasting here. This will not be lasting, in my opinion, right? And my thing with Nike, the nice thing for Nike, though, I will say, is I can add to the stock in future years and feel comfortable, right? Like, let's say Nike goes to 110 next year. I could still feel comfortable buying Nike at 110. Now, I like buying Nike at $70 or $80, much better than I like paying 110. But even if Nike was 110 a year from now, I would have no problem paying 110. Even if the stock was 140 a few years from now, I have no problem paying 140 for this. It's just such a premium quality stock that I can feel comfortable in, right? It very rarely has major downtrends. We've been going through one of those last few years. It's not going to last. And eventually the stock will make it to the other side. It's a dividend payer. It's a value name. It's a stock I just feel very comfortable in, and they have a great moat around that business, right? I started a position in Estee Lauder, EL, in the public account. This is a stock I just started buying recently in my other portfolios, and I'm like, let's get a position started here in the public account. So I bought 125 shares here. This is another one I want to add aggressively to. I'm worried about EL, and I'm not worried about the long side. I'm worried about EL in terms of, I believe this stock's probably bottoming sooner rather than later, and I'm not going to get nearly the position built out here that I want to have built out. My hope is they report earnings on Monday. My hope is earnings aren't good, conference call isn't good, and the stock goes lower again. That's my hope. But I'm very concerned that this stock is going to start going up here, and I'm not going to get my position built as quickly as I need to. Now, with that being said, Estee is such a premium name that I could feel comfortable buying the stock over the next several years. It's not like, if I can't get the shares at $90 or $80, that I'm like, I'm not buying Estee Lauder. No, I could still pay $150 for the stock. I could still pay $125, right? Now, talk about going through a recession for your stock. Brutal 5-year for this one. It's lost about half its value in the past 5 years. Brutal. Brutal. This is another stock that went in with a very high valuation. Their growth numbers have been horrible, right? And obviously the consumer's gotten hit very hard the last few years by inflation. It's very negatively affected Estee Lauder. But that's not lasting. What is lasting is Estee Lauder's brands. What is lasting is the overall moat around the business, which they really own the higher end cosmetics industry. They are the premium player in that market, and I don't see that changing anytime soon. And so this will make it out to the other side. It will emerge a stronger company, in my opinion, over the next 5 years than it was over the past 5 years. I think that's going to bode very well. And we're talking about it's a global company. So as the global economy gets better over the next few years, which I do believe the global economy will get better over the next few years, I do believe Estee Lauder will benefit massively from that, right? And their business in China, their business in Asia in general, their business in the Middle East, their business in Europe will see big bounce backs over the next several years. And then North America should come around very nicely as well. Now, if you want to hear me talk in depth about Estee Lauder, that was one of many stocks I talk about on the 5 Stocks I'm Buying edition, August edition. So if you guys didn't get to see that, it looks like about 46,000 people got to watch that. If you didn't get to see that, you want to hear me talk in depth about Estee Lauder and some of these other stocks, you can watch that video there, right? Now, additionally, I bought 20,000 shares, a little over 20,000 shares of the Planet. And this is a stock I haven't really bought in any major way in quite a while, right? But the time is now. There's another one. I don't think I have a lot of time in regards to Planet. This is one of those stocks that once people start to see the revenue trend the way I think it's going to trend here, in the margins trend the way I think they're going to trend, I think it's going to be night-night. And I think that you're going to see a lot of people want to come into a stock like this very, very quickly. And keep in mind, if the Russell starts rolling major, these stocks like the Planet, they're like call options on the Russell. So the Russell's been a lagger for years. If that baby starts to come to life because rates are going to go down and we don't see that major recession, we don't see that hard landing, a stock like the Planet's going to do amazing in that environment. So I think we've got a situation here where it's a freak stock, right? Where the fundamentals are about to get massively better for the company. We're already seeing the starts of that. Like we're in the first inning of seeing the fundamentals turn around. You're going to see inning number 2 come next quarter, inning number 3 come the following quarter. And then if you tack on in Russell that rolls as well, oh boy, like things will go from 0 to 100 real quick in regards to the speed of kind of the move up in regards to Planet. I've seen it before in regards to stock. I watched the stock go from 50 cents to $7 like that, right? And keep in mind, I think the fundamentals of business are going to emerge a lot stronger over this next year or two than when it went from 50 cents to $7 years ago. I think you'll see the fundamentals come around a lot faster this time. So the Planet, it's a speculative stock. Obviously, it's under $1 a share, but this is another one I'm looking at, and I'm like, let me, build some shares here in regards to this one. And so, yeah, that's one I might add to here and there for the next bit of time. Now, that's another stock I talked about extensively on Thursday on that video. So if you want to, I talked for probably several minutes about Planet stock yesterday, so I talked about a lot of their stocks in that video. So if you didn't get to see that one, check that video out I released yesterday. Now, we're about to go into another big week of earnings. Actually, I think this week we're about to go into earnings. Bigger week than last week, believe it or not. Yes. Actually, this week was kind of boring. This was kind of a boring week for earnings. This upcoming week, no. So Monday morning, Estee's reporting. My hope is not good numbers, not good conference call, and their stock flushes. Not that confident of it. I'm more scared that Estee is going to go to like 120, but my hope is it goes lower because I really need to build this position. And I would much rather build this position under $100 than over $100, right? I'm going to be keeping a close eye. Palo Alto is definitely a lot of people are going to pay attention to Palo Alto because of the CrowdStrike situation. Palo Alto is seen as a competitive there. A lot of people are going to keep their eyes on Palo Alto on Monday after the bell. Ooh, baby. Then Tuesday before the bell, Lowe's is reporting. Home Depot had a very disappointing earnings report. If I recall, Home Depot's revenue was up like 0.6%, and I believe their net income was down like 2.1% or something like that. Home Depot numbers, very boring, very sleepy. Lowe's, do they report something similar? Going to keep an eye there. Toll Brothers after the close Tuesday. My hope is regarded with Toll Brothers, and honestly what I think is going to happen, I think Toll Brothers is going to come through with very nice home sale numbers. I think Toll Brothers is going to come through with a very good conference call. I think management team is going to be confident. I think they're going to talk about their businesses uptrending. We'll see. That's what I think is going to happen, and I think If anything, I think Toll Brothers maybe goes higher. My hope is it goes a lot higher because of what I might be planning in a few months from now. We'll see. But that's my hope. My hope is great numbers, accelerating business, great conference call, stock booms, and then everybody gets gassed up about interest rates coming down, right? Everybody wants to get in the home builders. Toll goes to 150, toll goes to 200, and then we come in and we knock that little dragon down, right? That's a little dragon, we call that one. Wednesday, Target is reporting, important one to keep an eye on. Snowflake's reporting after the close. I'm going to keep an eye on what's going on with Snowflake. Their growth has been decelerating, I would say, quite a bit over the last couple of years, and so a lot of people are kind of disappointed with Snowflake, just to be quite frank, and so going to keep an eye there. They used to be seen as like the premium play over Palantir. Like literally, I remember 2-3 years ago, Snowflake shareholders used to talk so much trash to Palantir shareholders about how much they were growing, how slow Palantir's growth was, right? And that was just 2 or 3 years ago. And now all of a sudden you're looking at these growth rates and it's, what a difference, man. What a difference a couple years makes. So we'll see what happens with Snowflake as a stock I'm going to keep an eye on. Zoom is a stock I have a small position in. Got to keep an eye on Zoom. That's a great income statement, great balance sheet, stable business model there. Excited to see what their numbers are. Cava's got an insane valuation on it, but they got the growth, right? And so it's a tough stock to bet against. I would love to open up and put a position against Cava, but I mean, it's just so early days in their growth cycle. Like, people aren't even paying attention to valuation. As long as they just keep hitting their growth metrics, like the stock will just continue to just be where it's at or go up, right? Workday is one I'm going to keep an eye on. What's going on with businesses out there. Intuit's an important one to kind of keep an eye on from small business, but it's not the most important because Intuit has such a sticky business model. Like, you don't really get great data from Intuit. I mean, if somebody has QuickBooks, they're going to stay with QuickBooks. If somebody uses TurboTax, they're going to keep using TurboTax. So I don't think it's the best stock to keep track of, but it's a great company, great business model. That's obviously where my main man from PayPal came over, Alex Chris, right, who's now CEO of the company, but very good stock overall. So busy week next week. It's going to be a lot of fun. Looking forward to covering it all for you guys and kind of keeping you up to date what I'm up to in the market, what's going on here. Appreciate y'all joining me as always. Thank you so much for being here. If you're looking to become a much better investor than you are right now, you're looking to get up to a much higher level, learn everything you have to learn in regards to this game, how to pick stocks, how to run your portfolio properly, income statements, balance sheets, cash flows, all that good stuff. Click the pinned comment down there. Apply to get access to my private stock group, wealth group, as well as 1000xstocks.com. And we'll see if we can get you access in there maybe next week or the week after. All right. Much love and have a great day.